Washington to Wall Street. It is the first day of trading for fitness company Peloton on the NASDAQ today. And that stock is dipping below its IPO price of $29 a share. Guys, you can see they're now $26.72, off 7.8%. When we talk about companies going public, this was an interesting one because you could call it a tech company. You can call it a product company. You can call it a fitness company.
Right.
But nonetheless, today it is a company that is having a rough debut.
Yeah, I mean, we're starting to see this a lot lately. I'm starting to think that investor appetite just really isn't there like it was at the beginning of the year for these companies that are not yet profitable. Obviously, Peloton has had great growth, but their losses continue to widen. There's concerns there that it's becoming very expensive for them to acquire new customers. Their bikes are expensive, cost prohibitive to a lot of people, even though they do have this offering of a subscription service, which I know Brian Sozzi absolutely loves. He uses it. He has a piece on that today on yahoofinance.com. But I mean, I think investor appetite for some of these IPOs, I think we're really starting to see it wane.
Yeah, and investor appetite specifically when we see these companies, their losses are growing pretty quickly. Net losses expanding at 308% compared to top line revenue growth of 110%. Another one of those companies that's not profitable, Veronica, and those companies haven't necessarily fared well.
Right, and so what is that path to profitability, right? And also how wide of moat do they have around the company? So if another competitor comes in and is able to do what they're doing for cheaper, and we have something like the economy turning, how protected is this business? I wonder about that.
Yeah, and talk about the risk factors as well, not just that moat, but also the fact that they are currently under some pressure when it comes to music rights.
That's right.
And the music that is used in their classes that the people who use Peloton will be using.
300 million, I believe, is the number that the music industry wants to take from Peloton to use their music for, their classes. And I mean, anyone that's ever taken a workout class or a spin class, music's pretty integral, to it. I mean, no one wants to sit on just the bike and just pump themselves along by themselves. But Veronica, I think you made a really great point. Everyone has been talking a lot about recession and the fears that the recession is coming. And as we know, luxury goods like a $4,000 bike or a multi-$1,000
treadmill,
right, is not the item that people say, yeah, now I'm going to spend that money on this item. So right when we're going into, it's not guaranteed that we're going to be hitting a recession next year, but with all of the talk and all of the fears that we might be heading into a recession, with what we are seeing with the economy slowing down, I mean, that presents a pretty big headwind, I think, for the company.
Yeah, there are a lot of questions, and investors are asking these questions today as we see weakness in that company stock. But joining us for more reaction is Yahoo Finance's Brian Sozzi, big fan, along with Peloton President William J. Lynch Jr. Sozzi, I'll send it to you.
All right, thanks so much, Zach. William Lynch, good to see you today. Congratulations on the big IPO.
Great, it's a big day for us, Brian.
So initially on the stock price reaction, it has opened down. What do you make out of it?
This is a huge day for Peloton. It was a fundraising event for us. We've got over $1.5 billion on the balance sheet. This was about a celebration of our members, and we feel great about it. We're believers in our future, mid to long term. And if you look at the biggest buyers today, I think 7 of the top 15 buyers have been in the stock and been in our cap table and have seen this management team execute and can see the potential for the brand, know that we're growing triple digits. And so our team's never been more confident in the future for Peloton, and we feel great about today.
The stock is still not down as much compared to what we saw some of the other IPOs out there. Is this somewhat of a minor win? And I'm curious, what are you hearing from your investors? Why are they sticking with you and maybe not some of those other hot tech companies?
I think the macro environment, as you're noting, has been difficult, and there's been a lot publicized from those other companies. We feel like we're unique in a lot of ways. One, we're a category of one in the valuable connected fitness market, which we pioneered. 2, if you look at our unit economics and the business, it's one of the best business models I've seen in several decades of running consumer businesses. And also, we're the disruptor in a very valuable category, fitness. There's 63 million people in the U.S. who go to gyms and are looking for a better way to work out, and we believe Peloton delivers that better experience.
Full and fair disclosure, I went out and bought a Peloton bike 4 weeks ago. No, I do not own the stock, in case you guys are wondering out there. What do you say to the naysayers that say this is a fad, it won't last long, and there are a lot of other competitors out there?
Fitness is not a fad. Fitness is not going away. In fact, fitness spending has been exploding over the last decade plus, and I mentioned 63 3 million people in the U.S. who are gym members. If you look at the overall wealth and wellness and fitness market, it's over $4 trillion globally. And so, if anything, people are getting more fit and investing more of their discretionary dollars into fitness, and that puts us as the category of one in a great position, we believe, mid to long term.
CEO and founder John Foley has said he does not see profitability until 2023. What takes so long to reach that point?
Well, we see opportunity. So people talk about losses. We see them as investments. I talked about how beautiful our business model is. We've been growing triple digits. We're funneling money into new categories. We launched our Tread, which has been extremely well received. There are actually more runners and boot camp studios in the country than cycling.
Any hint on a new product coming?
I'm not going to announce a new product today, but
have to try.
We're spending a lot on innovation. We opened international markets, so we went into the UK and Canada successfully last year. It's going very well. We're opening Germany within the next 60 days. So we want to bring this experience and this award-winning platform to more and more people, and that's why we're investing.
You're making two big investments, a large facility in New York City, but also I believe in Germany with regards to live programming. How should an investor view you guys? Are you a media company? What are you creating in those facilities?
Right, we get that question a lot, Brian. We're all of it. We design hardware. We're a software company. We're a media company. We have over 950 classes that we broadcast every month, That's going to 1,500 every month across yoga, spin, running, boot camp, strength, meditation. And so, yeah, increasingly with our broadcast, what we're investing in the new studio in New York, you referenced the other super studios in London, we're evolving into more and more of a media company.
And William, this isn't your first rodeo. You were a long time, you were the CEO of Barnes & Noble at one point. That's when I originally met you. What is it like working for founders? You work with Barnes & Noble founder Leonard Riggio and now founder John Foley. How is that different, or just create a different type of company?
Well, John and I, it's unique. We've worked at 3 companies together. So we started at IAC working for Barry Diller together. He actually worked for me at Barnes & Noble. John was there. And so there's a lot of trust and love there. And we partnered to run the business, and it's been a great partnership. John's an incredible entrepreneur. And so the way we think about it, he would tell you and I would tell you we're partners, but it's beyond John and I. This team here is phenomenal. We built a great team. And you know, as it relates to BNN and Peloton, I will tell you, it's a lot better to be the disruptor than the disrupted, for sure.
Very true. Lastly, before I let you go, Retail Push. You actually came on our network, I believe in January, and said you are a big believer in retail. What does that retail rollout look like for Peloton over the next couple of years?
Brian, we're at over 80 showrooms today. Our four-wall profitability, I think, and productivity is one of the highest in all of retail right now. We're massive believers as we launch new products of retail as a place to demonstrate. We do test rides and runs where consumers can come in and try the bike, try the tread. As we launch more new products, that's going to become more important. So we are absolutely, what I told you in January, still how we feel. We're opening, I think this year we're opening over 20 showrooms over a 12-month period. So we're opening 6 in Germany as part of the launch there, 5 or 6. So we're big believers.
Well, William Lynch, good to see you. Congratulations. And friend request me on the Peloton platform. We got to go head to head.
What's your rider name?
At Brian Sozzi, real original. But I want people to know I'm on the platform.
Okay.
All right, William Lynch.
I will. Thanks.
Good to see you. Zach, back to you.
All right, glad our listeners have that information. Appreciate it. Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.